Hello and welcome everyone to the Commodity Report for the 7th through to the 8th of March 2023, presented by myself, Phil Carr, at the Gold and Silver Club. So with that, last week we had natural gas prices. They surged 20% to the upside. Alongside that, crude oil at the start of this week broke back above $80 per barrel, breaking out to the highest level in 3 weeks. We also had gold, silver and platinum prices all surging last week into the closing limit up at the highest level in over 2 weeks. However, we identified with you on the week ahead commodity report, you must make sure that you're banking into strength here, locking in the gains that we've seen over the last week as we're getting much closer to a heavily news-driven week. On Tuesday, we of course had Jerome Powell's testimonial. This caused a sudden surge with the dollar index breaking all the way back towards 1 month highs. Alongside that, we have non-farm payroll data on Friday, and moving into next week, we have quad witching, which is notorious for bearish momentum across many commodities, giving you massive opportunities to sniper in at much lower prices. In fact, we're already seeing that on Tuesday. Essentially, we've seen now a 4% drop to the downside with platinum, 2% drop to the downside with gold. Silver prices, they're down 3.5%. Copper prices, they're down 2.5%. Oil has also dropped back down towards $77 per barrel. Now, we took the opportunity on Monday with the breakout that we saw back above $80 per barrel. In fact, to bank two of our oil positions, over 650 points profit per position there, in order to scale out and lock in banking on strength, as we were fully aware of the potential risk off that we were going to get over the course of this week as we get closer to back-to-back macro-driven opportunities in the market that will be presented over the course of this week. So of course, we also took the opportunity on natural gas on Friday when we saw a 20% surge last week and a 9% gain to the upside on Friday to book 700 points profit on one of our lower entries. We've continued to build into multiple positions on the energies over the month of February, and very simply now, as we talked you through on the week ahead report, we're taking the opportunity to scale out and bank into strength and then rinse repeat the whole process, as we're now seeing many commodities start to roll over and pull back down towards their swing lows, which if you've been patient, you're essentially being gifted with another opportunity to buy in at much lower prices. As we've mentioned multiple times before, this is not a buy and hold market. Multiple commodities continue to move range bound over the month of February. So it's very simply the case. You want to buy low, sell high, keep rinsing, repeating that process. Just look at crude oil. That's been the case over December, January, February, and into March as well. Repeating that cycle multiple times, it will make you much more money than just buying and holding. This comes down to understanding and taking advantage of the real-time data-driven cycles that we get for each commodity. So understanding and learning the daily, weekly, monthly, quarterly cycle for each commodity. Further compound that with the key areas of liquidity in the market that are targeted. This allows you to not only sniper in your entries, but also sniper out, exiting at the swing highs. And alongside that, further compound this with the capital flows in the market. So for example, once we start moving into April, we'll move into a new quarter where typically you're going to see a lot of fresh capital to come into a lot of commodities, which gives you an opportunity to benefit from the strong impulse moves higher that we typically get as you move into a new quarter. However, March is very different because March, you've got the end of quarter outflows. You've also got the quad witching, non-farm payroll, CPI data as we go into next week, multiple news-driven events, which will offer you massive opportunity to trade those ranges and get in also at much lower prices than you may have seen over the month of January and February. Further align that too with the macroeconomics, the fundamentals in the market, the geopolitics, the intermarket correlations, the ratios for each commodity. Align that with the data, the statistics, market intelligence, then finally marry that up with how the hedge funds, money managers, banks and institutions are positioned in the market. This is all going to help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the professional research-driven approach to the market and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.